Crypto Parabellum Podcast, episode number 8, with high fidelity. Or so we think. I guess we'll find out. But we think high fidelity. Welcome back, everybody, to another episode. Excited to be here with you with our full panel in their intended recording spaces, no less. Gentlemen, welcome back.
Hello.
Hello.
I think last week was not great. Last week was not great. I was in Chicago. I had AirPods. I had half-baked internet. So sorry for that.
You know, if you know who the chief operations officer is for Stack, you should tell them to upgrade the Wi-Fi.
Oh, don't get me started on that.
Dude, I have been blasting people for the Wi-Fi.
Our Wi-Fi name at our office is still the former company that was in that space's name, and
Come
we've been
on.
there for 7 months.
Is that a union deal? Like, do you have to get somebody from a union?
It is
No,
a union
no.
deal.
God.
Yes, it is.
Well,
Yes,
but
it
that's
is.
but that's all right. But I don't think it's named that because of a union. But yes, it is.
But
No,
the
it's
point is
not named
upgrading
that
the
because of
Wi-Fi,
it. I'm
yeah.
saying like changing anything is because we have to do all this. Doesn't matter.
Yeah.
Sorry
union
about
bullshit.
last week. We're gonna fix
Yeah,
it.
we're back. Doesn't matter. You know, what's funny is those who gritted through, and I checked this morning, we had probably 60% of the listenership that we usually do, and I attribute that 100% to fidelity quality issues. Those who went through enjoyed the content. We had pretty good content. It was just hard to listen to. So we're not going to do that anymore. If we ever have a recording like that goes horribly astray, I'm just going to tell you guys we're not doing a podcast this week. So, or I can act it out like a one man, just like regurgitate it myself. Would you guys want to see that? I could like put on a hat for Joel and play the Joel card, and then it'd be fun.
Play the Joel card.
All right. So this week's going to be good. You know, there's a ton of things that are here. We're here to discuss, which aren't like, third rail news, shocking, where you're like, holy shit, these guys just changed my life view. But a lot of stuff that I think is going to be relevant over the next weeks, months, possibly years. And one thing that happens today that we just want to bring up is you have the Fed rate today. So the Fed is going to talk about what they're doing in a couple hours here, which is going to have some sort of effect on the market. So just curious, are you guys playing this at all? Or are you just sitting in cash waiting?
I mean, I wish I was sitting in more cash than I am.
Okay.
I as a percentage to my overall portfolio, I have a decent amount of. It's like 30% cash,
Okay. Yeah.
which like sounds like a lot, but it feels bad. I made a joke yesterday. Twitter, I just like wake up and lose money, wake up and lose money, wake up and lose money, and that's been the story for like a month.
Yeah.
So I'm not playing anything differently, but I do think that we need to just get this over with. Like get the rip the Band-Aid off is the right word for it. Get it over with. Stop with these little increases month over month. Obviously, or last month, right? We had nothing, right? Are we in a blackout period or something like that?
Yeah. Well, they just had they skipped a
then,
meeting, right? So there was a lot of time. Yeah.
Yeah. Just get it over with. Stop bleeding me out for the rest of my life, please.
Yeah, just
Joel,
cut
what about
that
you,
off.
man?
Well, as you guys know, I don't really make plays anymore. I don't really try to, buy rumors or sell news or anything to that effect. If the price is, unlike Alan, I'm in a position where I'm definitely a little bit more biased to the downside because instead of being majority non-cash, I'm majority cash right now. So, I wouldn't mind seeing $1,000 ETH again. I bought $1,000 ETH last time. I would buy it again. If it goes lower, I would buy it there. So, I definitely will look to buy if prices go lower at some point.
For the first time for me, I'm more in cash than I have been. And I just think that we're too close to an area where there's some like black swan day where like people quit the markets because they got hurt so bad and they walk away. I'm like, that's usually about them. So I'm looking for something that's absolutely painful and absolutely crushes a lot of people where they're like, fuck crypto. And then that's when the bottom's in. Almost every time, guys. Every time you have that thought about like, I'm done with this, I played my hand, I lost, I need to go back to my job. When you have that thought, bottom's probably in.
Well, yeah, yes, but also like you're speaking to a small subset, and I think our audience may definitely be that small subset.
I think it is.
traditional, typical, average retail crypto investor on Coinbase been
Here we are
gone,
with the great
right? And
internet.
didn't quit their job to begin with, right?
Eh,
So
okay, good.
the majority of that volume has been sucked out of the market for a while. People don't care about crypto right now. People don't
Yeah.
care about much of any speculation right now because people care about gas prices right now and they care about
Yeah.
whatever else is on the news. And that's just a part of the cycle that we're in right now. So I think if we see a 1% hike today, which I think you said there was a 20% chance that there's a 1% hike.
Correct.
Um, you know, I think the market reacts poorly to that, but the lack of retail buying interest is what makes it so volatile. Is like when the traders start selling, it's a self-fulfilling prophecy. It's like Jared, like you trade all the time. Like you spend
Yeah.
your days looking at charts and
Yep.
you're looking at all the same lines as all your homies who are doing all the same things every
Mhm.
single day. Like you're
Yep.
all in the same Telegram chats. So trading, especially in these markets and especially when TA is involved, is can be a very self-fulfilling prophecy sometimes. Like everyone thinks that if there's a 1% hike that the price is going to go down, then you and other traders are going to go in short and there's not going to be any dumb
Counterparty.
money to buy it up,
Yeah.
right? And so that's why you see more volatility when this sort of stuff happens.
It might be worth spending 5 minutes on like what happened sort of overnight with Russia, because I think that could drive inflation. When you look at the last inflation numbers that got released, month over month was almost unchanged,
Yeah.
which is not a good thing, right? Like the hope is that with these continued rate hikes, you should see month over month be going down.
Right.
Year over year, no change is like maybe understandable, but month over month, no change is bad. And so yesterday, there was scheduled like a Putin press conference, a Putin chat,
Yeah.
if you will, and it got canceled at the last minute. He then had it while we were all sleeping.
Yep.
And the message from that, from my understanding, was escalation. Russia sort of doubled down on the idea that they are now going to mobilize more aggressively. And they've argued that they've been holding back this whole time.
Yep.
So the last 2 weeks, they've begun to get a lot of flack. Like if you go read Reddit or something like that, everyone thinks like, oh, Russia's going to pull out. This announcement is that they're pulling out. Like there's no easy out for Russia anymore.
No.
And unfortunately, in my opinion, the U.S. has put Russia in a position, the world has put Russia in a position where there is no gracious out. And when you do that, the only path that you leave open for somebody is, complete destruction.
Yep.
And so what Putin has claimed is that they've been taking it easy this whole time. These losses that they've been taking, or their inefficiency in being able to take additional regions, they got pushed back in the last week, has just been because they've been taking it easy. And so pretty immediately after that, Russia bombed or attacked, I'm not sure the right word in this case, a dam, and sort of destroyed the dam, and is saying that they're going to now be more aggressive. Winter is coming in Europe and there's no energy to be had. And that is a result of super bad European energy decision making to shut down nuclear and be incredibly reliant on all things Russia gas.
Yep.
And Russia's going to cut them off. So I think, we're now in September. Give it 2-3 more months. People are going to start getting cold. And you've already backed Russia into a corner. There's no easy out anymore. Russia has been said, oh, we're taking it easy on you. Now we're going to be aggressive. And all of Europe is now going to get cold.
Yeah.
So I don't think it's a recipe for any good outcome over the next 3, 4, 5, 6 months.
Let me read. I have a couple paragraph snippet of what he said because I think it's fucking absolutely terrifying. So this is from last night. Our country also has means of destruction, and in terms of individual components, more modern than those of NATO countries. When the territorial integrity of our country is threatened, we will use all the means at our disposal to protect Russia and our people. This is not a bluff. The citizens of Russia can be sure that the territorial integrity of our motherland, our independence, and freedom will be secured with all the means at our disposal. And this is the big part. Excuse me. Those who are trying to blackmail us with nuclear weapons should know that the wind rose can turn in their direction as well. And that was it. So that's a fucking like, hey man, fuck around and find out. And what's funny is I actually read a story about when he was stationed in East Germany. Like he played a bluff at his station where they were being overwhelmed, and essentially went out and straight lied and was like, "Hey, man, I want you guys to go home. I don't want a conflict. You don't know what we have back here. Like, you need to turn this thing around, or else it's going to get real bad for you." And they turned around. So, dude has deployed this since East Germany as a, like, I don't know, is he bluffing or is he not? I think he's done enough to show that he doesn't really, he bluffs, but like, where's the line stop, right?
Well, yes, I agree with that. That's like a pretty scary message. If I could give the other side so that it's not straight doom and gloom, the positive side or the silver lining in all of this is immediately after sort of that statement and the planned speech, China came out and was first, for the first time since the conflict has started, not overtly positive on what Russia's doing. So that is good.
Yeah.
Russia, Iran, China is sort of like seen as you know an anti-hero maybe in this case, and in that case, China is now saying like we want to see this, we want this to be seen as something that is peacefully resolved, and I would say that pressure is starting to come because of the economic situation that China's in.
Yeah.
Right. Like they have their own credit crisis going on, sort of like a mini 2008. I guess we'll see where it ends up. But
Yeah.
that's good for the rest of us that China is saying like, hey, whoa. Like we might not be part of this. We might not be part of this gang anymore.
Yeah. Yeah, I like that. Joel, anything to weigh in? I know we've been kind of dominating here.
This is not my favorite topic, certainly, nor my area of expertise. I would definitely not call a nuclear bluff coming from a country that's already at war and feels like, when you're already at war, even if it's with your neighbor at a small scale, like we don't know what it's like to be at war.
No.
American citizens,
Personally,
American
no.
soldiers know what it's like to
None of
be
us.
at war
I mean, our
because
country
they
hasn't
are
seen
overseas.
war in our generation.
Right. We don't know what it's like to be at war, right, as citizens of America. And so Russian citizens do at this point, Ukrainian citizens do. War's never been brought here outside of terrorist attacks. That is a scary thought. That is a scary thought because both Russia and America or these other countries, I mean, they are modern countries. It's not the desert anymore. And so that's something that no one wants to think about. So hopefully there's a peaceful resolution. I wouldn't call that bluff. Luckily, I'm not the one in charge, but it does make me as an American, think fondly back on. I said this before. 9/11 was the worst day ever, but 9/12 was the best day in American history because
Yeah.
it was so uniting, and at that point no one was trying to cross America because we were the ones that people believed had a backbone, I suppose. And
Right.
now Putin is definitely showing that same type of strength, and I don't have the confidence from our front office in this country, like that Sleepy Joe is ready to go to war. And so not we won't make this a political podcast,
Yeah, no doubt.
but I'm definitely hopeful that we can just see this kind of go away.
Yeah, I agree.
I think it ties back to the rate increase, right? Like that's where we got on this topic, and that's where it becomes important, is because so much of the inflation calculation is energy cost. And right now, at least in the US, energy costs has gone down over the last month and a half. It's not where it was, but it has gone down. And this escalation likely means that we run into further problems. And that means that rate increases do not help energy prices.
No, they don't.
Like you can increase the rate as much as you want, as long as you want. But if there's a conflict going on that's restricting the flow of hydrocarbons, then it doesn't matter. And so I want to see this rate thing resolve itself as quickly as possible. Just jack the rates, get it over with, stop bleeding out over months and months and months. But there's an argument to be made that you can increase the rates all you want. It's not going to help.
Yeah. And I think I sent it to you guys yesterday. I don't remember exactly. Maybe you sent it to me. I don't know. But the strategic oil reserves for the U.S. are at like 40-year lows.
No, I didn't know that.
Yeah, strategic oil reserves. I got it right here. Strategic petroleum reserve is back to levels it was in 1984. That means nearly 40 years of inventory build has been drained. So essentially, we've been tapping in. Biden said he was going to kind of control prices, and we've erased like 40 years of surplus since the whole thing started. Now, we
I'm
didn't have a
sort of
tremendous
okay with
surplus to
that.
begin with, but
Yeah.
still, we're using it, and we're back down to where we were.
I kind of think that that's what it's there for, right? Like,
Yeah.
what's the point of having a strategic oil reserve if you don't use it at a strategic time? I would say the concern would be like you deplete it too fast, faster than the conflict resolves.
Yeah.
Right? So
We are sitting on plenty of oil as a country.
No
It's
doubt.
just a matter of fracking or not.
Yeah,
One
for
of the
sure.
things I thought that was
Sure.
most interesting about inflation, which I do think ties back to crypto prices, is, and the reason that I personally think and have thought for a while that there is still more downside to come in the more speculative asset classes like crypto, precious metals, real estate, or whatever. Like real estate futures, not like buying a house, is that you mentioned, Alan, like month over month, inflation numbers for things like um, energy are down, and overall, and medical and other um, categories like apparel, new vehicles, month over month, all of those are decreasing.
Yeah.
But there are three at least key parts of that CPI index that are going in a straight 90-degree angle straight up and have not come down at all. And that's food, shelter, and electricity. And those were lagging, by the way. Those were increasing slower than some of those other things. Now we're getting to a place where inflation is really hitting the like reality. Not new vehicles and apparel, right? Not cars and vacations, and not just gas prices, which we all use too much of, but your how like your actual food that you eat and your shelter, and that's where we start to have a bigger problem economically, and that will certainly be a bad thing for all investment classes, in my opinion, especially crypto.
I agree. The housing market is not getting talked about enough. There was an article out yesterday that showed percentage of household income being spent on mortgages or rent, just housing in general, and I believe it's now 44% of not take home pay but gross pay. So that means the actual percentage is what, 50, maybe 55, something like that.
More.
Is being spent on shelter. This is the highest it's been since right before 2008. That has to change. You cannot spend 50% of your household income, which likely in the future months will be outpaced either by inflation. Like, we're not going to see wage increases. Companies aren't doing incredibly well. Hiring is slowing. These houses, people aren't going to be able to afford them anymore,
Now
especially those on variable rates on mortgages.
yeah, hopefully variable rates aren't that popular anymore. I don't know
It's
the exact
22% of the mortgage
22%.
market.
What?
22%. Yeah.
You would think that, that lesson would have been learned. I mean, you're in a tough spot, man, right now if you're in a variable rate, that's for sure.
Yeah.
Thankfully, it's not a higher percentage.
I mean, dude, you lock in today. You get to a fixed rate today if you are. I mean, yeah, it's gonna suck. You're gonna pay more per month, but fucking do it.
I mean, yeah, if it's going to keep going up, certainly.
I don't really
I
see
mean,
how it doesn't.
Yeah, it has to.
But
It
you,
has
you
to.
mentioned that 55%, for a traditional conventional mortgage, which is what most people have, like those, there's a scale of what's like allowed for a government-backed mortgage. Now, for jumbo loans and for folks who have mortgages in excess of about $650,000, 700,000, like on the loan side of it, the maximum debt to income ratio is 45%, and that's the maximum. So that you will not be approved if your mortgage payment exceeds 45% of that gross income, and they prefer it to be lower. But on conventional loans, not only do they allow you to go up to 55%, and if they allow you to go up to 55%, what's the average consumer going to do? They're going to take that full 55%. Oh, I can afford it.
Yep.
The average
Mhm.
consumer uses credit cards to pay for extracurricular expenses. So in terms of like rough monthly costs, they overspend on cars, and if you let them, on their house. And then you have the fact that, again, on like a jumbo loan, which these are homes that are given to higher income, loans that are given to higher income folks and everything else. um, at the end of the day, you need certain qualifications and you have to put at least 20% down. On a conventional loan that lets you take a 55% debt to income ratio on that mortgage, they also almost never require 20% down.
Yeah.
Most conventional loans are secured with 5 or 10% down.
Yeah.
You're now starting to see, as a rate of interest rates going up so high, zero money down mortgages, and Fannie Mae, Freddie Mac are still going to approve that 55%. So what you're gonna continue to see is consumers rolled into homes they cannot afford, and how that ends, well, historically not very well, and that's some of the things that makes me kind of nervous.
Yeah. So just for the record, because I pulled it up, as of today is September 21st, Tuesday, September 21st. Mortgage rates 6.02 is the average 30-year fixed mortgage rate in the U.S. I'm at 2.8.
Yeah, I'm 2.99.
2.99.
Nuts, dude. It nuts. Like, it's double, guys. Double. You know that interest every month you look? Fucking double that. Like, that's unbelievable. It's not quite that linear, but like it feels like, God, that sucks.
Well, it also, but as a homeowner, you do still somewhat feel stuck. Like, again, like we're all in positions where, we live in, like, I don't know, like we live in houses that we can comfortably afford and all this kind of stuff. But we're still stuck here because you go sell your house, which is up for Jared, probably huge based on where you live. And
Correct.
Alan, you bought your house early enough. I imagine that you're up
it's almost
at least
doubled.
20% or
in a
more.
year and a half.
Yeah, so you're up and you're like, yo, sick. Like I'm way positive. Plus, I know both of you guys put healthy down payments down, like all those things that help you be in a very healthy position. But what are you gonna do? Sell your house and then take a 7% interest rate on the next house? That's also inflated 20-30%. No, so you're
stuck.
We're kind of stuck as homeowners. If you don't own a home, you have no idea. You're terrible. It's I know we're not providing a ton of alpha here. We're just like you're bullshit. Fucked. But right now it's about, I think, staying conservative, for sure.
Yeah, I'm with you, and I don't understand. We've kind of like ran far afield here, but I think it's relevant based on the inflation prices. It's relevant. We're a crypto podcast because a lot of times people look in. I think all of us are innately bullish on crypto long term. Okay. Like, not to say that price will go up, just like what's being built is interesting and it's going to go further, right? Like, price not being a part of it. We just like what's being built and we want it to do well. And we'd love it if there were less scams. We'd love it if it was more altruistic and if it got more shit done. So we all want to see that happen, right? Like, whether that's gaming and NFTs and finance and whatever it is, we'd all like to see it happen. So I think we all have like a bullish slight, even in our darkest, most bearish moments, which my stream last week on my TA podcast, I was like, literally people were like, holy fuck, Jared just had a funeral for an hour long on stream. And I'm like, yo, I see nothing to be positive about. And it's not that I don't want things to go up, but you look at these indicators and you look at 6% mortgage. You understand how much of the economy is based on home sales? It's so much based on home sales because that's how people gain equity. That's how you get rich. And so that's where excess money comes from. If people stop doing that, the reason why they're called risk assets is because that's the last fucking thing you buy after everything else is secured.
Crypto is the king of risk assets.
That's right.
Like that is the reality right now. Hopefully it won't always be that way, but it is right now.
I don't know. I like that it's that way because that means the upside, like, again, I don't mind this 80% drawdown. I know that we're talking about like retail folks. There's going to continue to be blue chip cryptos that don't react the exact same way. And now you have stables and you can earn yield. Like there's companies like Stacked, Robo-Advisors, whatever, that are going to come in and help that retail person not take that drawdown. But that drawdown is what gives us 500% next time. So I'm happy we're down 70% because my dumbass for once did not just hodl all the way down. I actually took profit, and I hope that we see more because that's the more we go down because of Jared's point being so long-term bullish. I just see dollar signs. But if you're in a position as a listener right now where you don't have that cash position, then I think you should be thinking about how you can get it, right? And how you can get there, because a lot of people feel like, I had this conversation recently with a close friend of mine. Man, I'm already down 65%. I'm like, yeah, and you're going to go down another 65% and then another 65% and then another 65%
Yeah.
because you can go down infinitely forever from any given point. And so it's never too late to sell. And I'm not telling anyone who's been holding down 70% to sell, but I'm telling you to seriously consider how you can get yourself into a healthier cash position, because the buying opportunities are generational,
I agree.
just like they were last time. I think they will be again.
And Alan,
And
I know you want to
loose
pop in. Go ahead, man.
Yeah, I mean, loose monetary policy sucks right now because we're feeling the inflation, but loose monetary policy is a net benefit to crypto in the long term
No
if
doubt.
we are successful. If we're not successful, it doesn't matter.
Doesn't matter.
But loose monetary policy will be good for us over the long term. So that, another silver lining.
Yeah. And Joel, to your point, never underestimate people's inability to do what's hard.
Mhm.
I want to sell. I got to
I
eat
get
that
it.
loss, dude. It's the
Dude,
core
I've
tenet
been
of
there.
why
Lived
the
there.
only reason why I'm good at TA is because I can take a loss. That's it. I can take a loss.
Yeah.
Most people can't. Anyway, back to the big picture, because I think this kind of rolls into what happens next. And there's a lot of stuff being built. There's a lot of new and exciting projects. I don't know if you guys saw it, but I want to talk about it next week. Vitalik put out a paper on what should layer threes look like, and it was fucking fascinating, man. It got me so pumped for the future of Ethereum and what happens next cycle, because it will be next cycle. I think it will be next cycle will be based on what Alan and Joel and I have talked about before, which is like, protocols that generate revenue and actually have like a business backing versus just theoretical bullshit. I think those are going to be the tenants. But then I think the next one will be layer three. So that's in my brain when I'm thinking about the next cycle. I think that's what's going to be the base of it. But he put out this unbelievable paper, which is hard to follow because it's super technical. But oh my God, I was like, yes, this is it. This is the coming to fruition of that which our fathers prophesized, right? Like that's how good it was. So I want to talk about that, but like and we'll do it when we're more well prepared. But what I have on our list today to talk about beyond what we already have was the Biden administration put out framework for regulating crypto. And I think Alan, I think one of the first, maybe, oh, you can tell me if I'm wrong. Didn't you say that in your opinion, like the regulation pain had to come for us to like go forward, moving forward? Like, wasn't that kind of one of your base theses for long-term crypto?
Yeah, in May of last year, I wrote an article around the idea that digital identity was going to be important in DeFi, and the reason it would be important is because regulation would bring the next crypto winner, and it feels like the last 3 months, 4 months have just been every week some new regulation, some new news, SEC this, White House that, CFTC this, CFTC that. It's sort of, it feels like death by a thousand cuts.
Yeah.
And I think it will continue in the report that you shared, which is, I suppose, the White House's, what do they call that?
Well, they called it a fact sheet, but yeah,
fact sheet. Yeah. So they put
it out in March,
lot,
by the way.
They had a lot of detail.
They put out they were going to do something in March. This is the result of what they did in March, of what they said they were going to do. Like, we're going to put together a committee to put together recommendations on how we move going forward. That started, we're going to put together, the committee was in March, and what they released on the 16th is this is where we've come from 6 months and what you'll see over the next year, 6 months, whatever it is. And so I have some thoughts on that, but Alan, keep going.
Well, so there are 7 things that they sort of headlines that they put out in this paper that said that they're going to focus on, and it might be worth just reading them quickly. There are 7 of them. First one, protecting consumers, investors, and businesses. These are their priorities. These are the things that after we've been looking at this over the last 3 months, we are going to take these directions. So protecting consumers, investors, businesses, promoting access to safe, affordable financial services, fostering financial stability, advancing responsible innovation, reinforcing our global leadership and competitiveness, fighting illicit finance, exploring a U.S. CBDC.
Yep.
And so, we can start wherever you want to kind of like give your opinions on these. But these are the headlines. This is what they're going to focus on.
Yeah. And my preface to this and why I think this is exciting and why I think it's worth bringing up is, to anyone listening right now, I'm going to link this like I always do. Last week I didn't have any links because it was a shit show and whatever, but I will put all the links to our articles in here, and I want you guys to go look at this White House Gov link, because very rarely are you given a heads up on what market making regulatory news releases will be, And the White House just gave you every committee and what they're going to do, when they're going to do it, what they're going to talk about. That is their mandate, to use a Jerome Powell word, since it's Fed Day, to go forward regulating crypto. So go through, read them, write them down, and put Google search alert like notifications on for these buzzwords, and you will be ahead of the news cycle, which is pretty nice of them to do. But anyway, they put that in there. I think it's pretty fascinating to read because there's so much about this that bothers me, but also you have to deal with. So Joel, I'll kind of tee you up since we all got our kind of intro. Like, what are your thoughts when you hear this shit?
I like it. I've always been, I think my friends have given me a hard time in the space for being like pretty pro regulation,
Yeah.
dating back to like 2017 time. Um, you know, what I've seen, I won't talk about any of the specifics really, because I kind of just have like a general thought that regulation is a necessary, it's not even a necessary evil. It's just something that there's a way to do it wrong and kind of overcomplicate it. But I like that they're taking this approach. Um, I I have my own opinions on like the U.S. central bank digital currency, which I think is I don't like. I don't like that. But like protecting U.S. customers, investors, businesses, one that stuck out. Promoting U.S. leadership is something that sticks out because we're a U.S. based crypto company, like what we have, and like we're very far advanced from a regulatory standpoint, more so than 99% of crypto businesses, and so we're trying to position ourselves as leaders. Um, but one thing that stood out recently on Twitter when people are talking about Ethereum and the SEC in particular. So I know that's not directly to this particular fact sheet, but just in the same vein, I've seen a lot of implication that like, man, if it'd be so bad if ETH was deemed a security. Like, oh no, what if ETH is a security? Like, if ETH is a security, like the little guy's going to be cut out. It's going to, you know, retail's not going to be. I don't know who spread the FUD that something being a security means retail can't buy it, or
Yeah.
who made up this idea that you have to be accredited to buy a security. No, that's not true. That's not true at all. That's not even close to true. ETH probably is a security based on the fact that it did an ICO and other things, but that's maybe a different. Like, I don't want it to be a security, but it doesn't matter. Is my point.
Yeah.
And whether ETH and Bitcoin are securities or commodities or what they are is irrelevant, because if ETH is not deemed a security and Bitcoin is not deemed a security and the other 99.9% are, it's the same outcome.
That's right.
And we need some sort of framework as companies in the space to ensure that competitors of ours are playing fair, to ensure that we're all playing by a set of rules that protects us and our clients and our consumers. So I like it overall. And if ETH is a security or not, or if cryptos are securities or not, is all irrelevant, because we're going to be able to service retail clients either way. It's just going to be under whose guidance, the SEC or the CFTC, right?
What gets frustrating is when, like Joel's right, that we sort of embrace the idea that this industry will be regulated, and so we're putting in the work now that we believe will pay off for years to come. The part that gets frustrating is when there's an uneven sort of playing field as a result of that. There are a lot of companies, whether they're competitors of ours or not, is sort of irrelevant in this point, but in other countries or in the US that are just simply either too small, or they're just taking the position that we don't care. We'll figure it out later. And we get put at a disadvantage sort of operating against them. However, what I think is starting to happen is that the big money, the big funds, the institutional sort of investors, but also banks, right? Because we hope to work with banks. They're like, we're not going to play in these gray areas. Yeah. And so what I hope will happen is that the rules are made clear. The companies that operate within the rules are fine. They can continue to do that. The companies that operate outside of the rules actually have action against them, because if there is no action, then the rules are not rules unless they're enforced. And so, what gets frustrating for at least me, I'll speak to, is when you try really hard, but the guy who's just not paying any regard to any of the rules is sort of moving forward with no repercussions. That gets frustrating.
Yeah. And I think that, quite frankly, Alan, if I had to guess, I think that you'll feel that way for a long time. I think that people are going to skirt these rules. I think people are going to do shit they shouldn't, and they'll just run as far as they can until they get caught, and then they'll try to evade it and start again. Right?
Then they'll go bankrupt.
That's right.
Yeah, and like if I have
That's
to
a
argue
business.
against
That's
myself,
business strategy, though, Joel. Like that's a business strategy. I'm going to run this shit as long as I can. Think about home builders, man.
Oh,
How many home
definitely.
builders are around for longer than 6 months?
actually, no, how many?
Like none. They all fold up to shield off their liability. They go, we built this house, we think it was good, we don't really give a shit. Let's reincorporate under a different name. Sure, go ahead and sue that LLC or that company if you want, but there's no assets there anymore. It's a business strategy, and it could work here too. Anyway, keep going.
No, I don't have anything else to add.
We
there.
we don't have a precedent either for securities becoming or evolving into non-securities, as far as I know.
Yeah,
I'm,
you're right.
I'm definitely no securities expert, but in the history of securities, before digital assets existed, there are no securities that evolve into commodities or something else that I know of. I shouldn't say there are none. Maybe there are some, but I have not heard of that being a thing. ETH, at the time of their fundraising in 2014, again, by most definitions, it was pre-launch, so there's a reasonable expectation of profit. This is true for like every single crypto, right? There was a minimum of 100 developers required, which is like, you could argue that's some sort of a common law for a business or an entity. There's like all sorts of arguments. But just because it might have been a security in 2014, it certainly does not operate like a security in 2022, especially post-merge.
Yeah.
So can the SEC just say, well, we were late, and so now that we're going to regulate it now we'll just do it based on what it is now, and now it's a commodity?
Right.
Or is there going to be some precedent made for some just new category that's not commodities, not securities, but something else? Or will there be a precedent set for something that the SEC says? Because again, if the SEC says it's not a security, and then all these other tokens that did ICOs all point to the exact same thing, they're going to say, well, then we're not secure. So like that's what I'm interested to see play out. And however it plays out, rest assured, services like Stacked, Coinbase, FTX, other legitimate players in the crypto space will still be able to service all the people they want to service.
Yeah. Yeah, I think you're right. And where I was going with that point that I teed up before I kind of got sidetracked on my own thought was, I think you're going to play behind in a lot of ways while this gets ironed out. But the carrot is very much there that once there is a framework for, like you said, banks and for other institutions to kind of to really lean in, I think it's going to be an incredible day for people who have been doing it the right way, provided you can make it that far. And obviously, I mean, I'm biased because I know you guys, but I think you're doing the right things. And it may be shitty between now and then, but no doubt those who get it right first and are aligned to take in that business are going to do exceedingly well. And I hope that's y'all. But regardless, even if it isn't, the fact that you're trying to do it is a noble endeavor worth pursuing, and mother of God, it needs to be done by somebody. So I'm glad it's you guys. When I look down this list of other things that are listed in here, there's things that annoy me. There's things that are so unbelievably political, and we don't need to go into it, but like, the National Science Foundation will back research into technical and socio-technical disciplines and behavioral economics to ensure that digital asset ecosystems are designed to be usable, inclusive, and equitable and accessible to all. Get the fuck out of here, man. Like, shit like this drives me absolutely fucking crazy.
Politics.
I'm looking forward to the National Science Foundation's report on equal accessibility in crypto. Fuck you, man. Like, that is purely just a stupid line item that somebody's like, yo, political points, we can campaign on this now. That's what they're going to campaign on. You'll see it. It drives me crazy. Literally, I feel like a twitch in my eye when I read things that are just completely irrelevant to the topic at hand and just like a little Easter egg put in to be called back upon. Well, in the report we put out in September, we talk about accessibility in crypto, and I believe that. Fuck you, man. Like, it's just unbelievable.
Yeah, I think that's called getting triggered.
No doubt. No one triggers me more than the Biden administration, or really just the federal government in general. But it's just things like, because a lot of stuff in here is really, really good, man. And like the CBDC, I'd be curious on this, and I think it's relevant for our listeners too. Have you heard Jerome Powell's thoughts on a central bank digital currency and what he said?
No.
It's unbelievable. Okay, so his thesis for crypto and regulation of crypto is it's fulfilling a void in the marketplace that is not presently served, And so if we create a central bank digital currency that is backed with the same verity and usefulness as the dollar,
That's not needed anymore.
That it's not needed anymore. So the central bank digital currency bullet points on here is Jerry P. If you ever listen to him talk about crypto, because he'll talk about it. His base thesis for crypto is like, yeah, I mean, they should be doing shit differently, but once we create a central bank digital currency, it'll go away.
Because that's all crypto's good for, is
That's
being
right.
a means of transaction in a stable coin.
Correct.
It shows a gross misunderstanding of the industry by the foremost leader of, the highest regulatory body in the US.
And that's what scares me, Joel. That's what scares me, is how many other people are like that. Have you ever, I know a lot of really smart people, dude. I know a lot of really smart people in a lot of different walks of life. And I'm talking about everything. I know guys that work at the Board of Trade. I know guys that work in regulation. I know lawyers. I know doctors. I know people that run middle market companies, hundreds of millions of dollar companies, that are CEOs of those companies. Do you understand how much they don't know and how wrong they are about this entire industry?
You can buy a half a Bitcoin, and people think everything's a cryptocurrency as opposed to just like.
Do they send me my Bitcoin? Do I get to hold on to it? I've been asked that question.
So I don't know a ton about the CBDC stuff. However, some of the podcasts that I listen to have sort of covered the idea of a federally backed stablecoin, like what that would look like and how that would run. Their opinion was that it would take forever. Like they were saying at minimum 8 years. And think about 8 years in crypto, that's like a lifetime.
Yeah.
And so I don't worry about that too much, to be quite honest. Even if they today decided that they wanted to do it, other much smarter than me opinions was that it would take years and years and years. So I don't like the idea of it. I just think that it's so far away that crypto will be doing something way different. I didn't see, 3 years ago, we weren't talking about NFTs. No. 3 years ago, the only stablecoin that had any sort of market share was Tether, right? Like, so and so 8 years from now, we'll be on layer 10 by then.
No doubt.
Jared.
No doubt.
We'll be talking about L10s.
I was going to say our kids are going to be trading L10s.
Yeah.
So I think I will list the article. I might even put some editorialization about things worth reading and kind of jokes in my little summary that I get to do. It's like 500 characters, so we'll see. But I'll point it all out for you guys to take a look at. Go in, read. If you guys see anything different you want us to talk about, let us know. But what's interesting is something that Joel just said a little bit ago about whether or not Ethereum is a security, because the ICO, and I know you were quoting regulatory verbiage there, where reasonable return based on blah blah blah, right? Like these are things that make you potentially a security. Well, that leads to our next article. The VC landscape is changing. This is an article by The Block. This actually came out, I think, today. Today. Why equity plus token warrants is the new go-to formula for crypto VCs. Okay, and the idea there is, I think really until now, the majority of investment from venture coinists, to use what's his name, Luke's handle, by venture capitalists in crypto has been, I want tokens. 3AC, as you guys spoke about before, and now everybody knows, didn't want equity in companies. They wanted tokens. Okay, they wanted tokens. That's what they wanted. That's been the way pretty much back through the last cycle, right? I mean, that's
they're liquid, right? Like equity's not liquid. Yeah,
correct. And so the equity plus token warrants is the new go-to formula for crypto VCs, which is a couple of things. Essentially, and you guys can correct me if I'm wrong because you're closer to this than I am. You say, hey, I want to buy 10% of your project or whatever it is at current valuation. You go through that process. We're buying equity. And we're getting token warrants on a future token, if there isn't one right now. And in the article, it cites something that Sam or Alameda backed. What was it called?
DYDX?
No, it was the one before that.
Meiston Labs, creator of the still unlaunched chain Sui, is a prime example. Investors in the round, led by SBF's FTX Ventures, received equity in San Francisco-based Meiston Labs as well as token warrants, meaning they will be able to claim a portion of Sui's native tokens, which will begin trading when the blockchain launches publicly. So that's a little bit different. Yeah, go ahead.
This is not new. It's newer for venture capital, for
Yeah.
VCs, because VCs are newer in crypto. You didn't have a lot of VCs in 2017.
Yeah.
Not like you do today. You didn't have Andreessen. You didn't have like these major. You didn't have YCOM back in crypto
Yeah.
startups. Like
Jump. Yeah.
you didn't have these bigger players in the traditional finance space. You had retail investors doing ICOs. But for the last 5 years, us inside that little retail community of trying to get allocations and like playing that whole game,
Yeah.
it's called a SAFT, a sale of future tokens.
Yeah.
It's the same as a safe agreement, which within our organization we've done and have a lot of experience with. So you can call it a token warrant. You can word it different ways to try to make it so that way it doesn't trigger any SEC
That's right.
buzzwords or whatever the case may be, and that's what it sounds like. Again, people continue to find ways to avoid these things being marked as securities, primarily because it makes selling them so much harder. But as far as I know, Alan, correct me if I'm stupid, but the equity that we have sold and stacked, and we've sold over $40 million of equity in our company, all of those options are securities. And so all of that future stock is a security. We sold it just fine. This pre-sale place is the only place where the retail little guy will be cut out, because you must be an accredited investor to make these sorts of safe agreements or SAFT agreements, or invest for equity in businesses. But this we're talking about today is VCs. We're talking about VCs who are the only ones who are really getting a lot of that pre-sale exposure anyways. And the ones who are not VCs that are getting pre-sale exposure, they are doing it anonymously through there's just like all sorts of stuff going on. My point is, the little guy, the person who doesn't have the Twitter following, the Telegram groups, whatever, the person who's just very into crypto, listens to podcasts, whatever, but they don't have like friends in the space, don't have influence, that you're not getting pre-sale allocations anymore anyways. Those days are gone, they're
Yeah.
behind us. ICOs, those days have passed. So I guess all that to say, it's kind of another moot point. It's another headline that it's like kind of old news. I think it's kind of moot. It really is only going to affect accredited VCs anyways. They're going to do what they want anyways. And even if these are securities, doesn't matter, because again, they're accredited anyways. So that's my
So
thoughts on
to Joel's point, if you are newer into crypto and you are getting allocations, don't invest in those allocations, because chances are it's far
it.
too
It's a
late.
scam, or it's
Yeah,
too
it's
late,
like
or you're going to get rug pulled.
if you think that you're getting access to something
Yeah,
like unbelievable, it probably is pretty
you're not.
unbelievable.
If you're in some Discord group, right, and this is a very, to Alan's
Yeah,
point, like
it's too
Yeah.
it's
late.
not worth it.
So I know that Alan.
However,
Yeah. Go ahead, sir.
so what I was going to say is that in regards to this either being a new idea or not, I think what might have to do, so if these tokens are securities, then these VCs also want protection as like, hey, if this asset, or excuse me, if this token is deemed a security, it's probably not going to be great for us. It'll be hard to trade it. Like, it won't be listed on Binance, it won't be listed on FTX, at least today. In the future, I'm sure it will be, but we want something else. And so the only something else to offer is equity. I think that's fine. But also, these NFT projects that have had a ton of luck selling their equity for massive valuations, I think VCs are like, wait, both are valuable. Tokens are almost like a sweetener. It's a nice to have. They're liquid on some type of schedule. We may or may not be able to sell them. I think if you're a VC, you should invest for the equity in the company, like look for value in equity of the company first, and then any sort of token is just a sweetener. And I think that's how they're looking at it now, and that's why CoinDesk is calling it a new idea. It's
Yeah.
not a new idea. We did this years ago.
Guys, and also, how do bull markets happen? They happen from narrative. They happen from something that people can get excited about. I've said this for a long time. I've said this for a couple of years, and I definitely am believing it more now than ever before. Very possibly the next big narrative, believe it or not, would be security tokens. Right now there is no market for security tokens, even though they do exist. By the way, security tokens have existed going back as far as I can remember. And there are some small platforms where you can register and KYC and go through this process, and then you can buy those security tokens. But they're not a big part of it. FTX US, they already list securities. Hello, they're a broker dealer. Hi, you buy Tesla on FTX, that's a security. So you think if all of a sudden half the market gets stamped with a security badge, or any new token, the next whatever, the next Solana comes out and it's a security, it's listed on FTX, it will be listed on Binance, it will be listed on Gemini, it will still be tradable on decentralized platforms because you can't stop that. So next thing you know, now you have this narrative of like, oh, now we have these securities. I know it sounds insane, but like that stamp of approval, if you will, by being a registered security, makes me excited to buy it if it's easy to buy. And we're far enough into this regulatory world in 2022 going in 2023 where the likes of the big players like FTX or Coinbase or whoever, they have or are very close to having everything they need to sell securities on their platform. And so why not be securities tokens? Why not, you know, like why not? Why not that be another narrative? Why not that be a new thing that we
I
can
would love
get
that.
excited about?
I would love that. And really, the point of me even wanting to bring this up is kind of like the age old, you know, you create regulation, and people that are a lot smarter than you and a lot more agile than you will find ways to get around it. Like, we're not even there yet, and they're already going, let's just pivot away from that model completely. They can regulate it all they want. We're done with it. So yeah, let's go do something else. And that's going to continue to happen in almost every manner.
You can't keep up with it.
You can't.
It'll just innovate too quickly. I want to take a really quick early victory lap on a topic before
please.
we head out. So there was one of the very first episodes that we did. I went on a rant around FTX's offer to Voyager and how stupid Voyager was for complaining that, right, like, well, you need to go through the process, and we want to preserve value. The only thing that they were preserving value for was themselves, right? So like we talked about that. So news came out last night that Binance and FTX are the two top bidders on Voyager. The deal is reportedly somewhere near $50 million. Now, keep in mind that whoever buys Voyager also then takes on all of their basically debt, like their debt to users. And I don't remember what that number is. I want to say it was 250 million or something like that. So that means the total deal value should really be somewhere 3 to 350, right? Like, it's not just $50 million. Now you have this $200 million debt you have to pay off.
Yeah.
So it's more than just the $50 million. But this is, I suppose, coming out on the 29th of September. So I'd like to take an early victory lap. If Binance's offer is accepted, apparently or allegedly, Binance is the current top offer. And it's reported that the FTX offer is very, very close to the Binance offer. That means that they could have accepted this offer 2 months ago without burning any more money. How many millions of dollars do you think they spent on legal fees between 60 days ago, 75 days ago, and now? Millions and millions and millions of dollars. You could have just taken this deal. Everyone could have had their money back a long time ago, and it could have been done. But you wanted to preserve your own equity value, and you didn't protect your users. And so now you're going to get pretty close to the exact same deal, but you got to pay yourself for an extra 2, 3, 4 months. So stupid.
I love it. No, it's a good point, man. They essentially held on. They kept paying themselves. The guys that were taking the fees got the fees, and a ton of money evaporated. So pieces of shit could do what they do. I mean, when you got into bankruptcy, I think their hands were tied, but they could have moved more quickly than they did, right? But
yeah, I don't know what they could or couldn't have done, but they had that offer, and they complained that they had that offer, and said, we're not taking that. And then the offer that they are going to be forced to take by the 29th, allegedly, is slightly better.
Offer. That's right. Yikes. All right. Well, hey, this is a good one, guys. I appreciate you popping in. I know you both got to run. Crypto Parabellum Podcast, episode 8, covering, CPI, what's happening with inflation, Biden administration regulation, how VCs are adapting. War. I mean, my God, we touch them all, boys. We did really nice work today. Hopefully you all feel the same, because the fidelity is good. So let me get us out of here. Hopefully we can get this to work.